Hello investors, I'm Hitesh Singla and I welcome you all to the weekly market update from 23 to 25th of January 2024. So let's start with the video. The European Central Bank kept their interest rate steady and expected inflation to decline in 2024. With this decision, the European Central Bank is becoming more confident that the current inflation rate is peaking and the interest rate is sufficient to bring down the inflation back to their target over the medium term, that is 2%. The ECB has also revised its inflation forecast downwards, which they are expecting to average about 2.7% in 2024 and 2.1% in 2025. This is down from their previous forecast of 3.4% and 2.3% respectively. If we look at the US Treasury 10-year bond yield, which had started rising and was above 4% last week, it's still above 4% and is close to 4.13 this week. If we look at the global markets, how they have performed in the last 1 week, the European and the US market were positive. They were trading at a good level. There was a lot of FII money outflow from the Asian markets, which had caused a lot of Asian market to be in the red zone. Now we look at the oil prices. The oil prices have been rising and they had risen to close. They are trading above $80 a barrel. The prices of 24 karat gold is currently at 62,080 rupees per 10 gram. Now, cause of all these factors, the rising oil prices, the higher bond yields in the US, and clubbed with the news on the new norms of the FPI, the FII have been selling in the Indian market and sold close to rupees 12,000 crores. And with that selling, the January became the worst month in which FPI had sold the maximum equity in this financial year. That was close to 35,700 crores. DIS for this week, they were net buyers and they bought close to 9,700 crores worth of equity. Now let's see how the Indian market had performed over the short last week. In this short last week, the Sensex and Nifty, they were both down by 1%. The Nifty Bank was down by close to 2.5%. Nifty Mid Cap was down by 1.75%, and Nifty Small Cap was also down by 0.71%. If we look at the current valuation, Nifty 50 trailing P's has reached 22.3, which is well below the 5 years and which is above the 2 years average. Nifty Mid Cap 150 trailing P is at 26.5, which is above 5 years and 2 years average. Nifty Small Cap 100 trailing P is at currently 28.7, which is above 2 years average and just above 5 years average. Now we will look at the charts, how the charts of Nifty 50 index. We see that after 15 January, Nifty 50 index have been making lower lows and lower highs. If we look into candle charts on weekly basis, we see that there was a bearish engulfment which was followed by a red candle, showing that there's a bearish trend coming up in the Nifty 50. If we look at the Nifty Mid Cap 150, the chart there's again a bearish engulfment, which indicates that there might be a bearish trend that might come into Nifty Mid Cap also. So let's look at how much the market had corrected in this recent correction. The Sensex and Nifty, they had both peaked on 15th of January, and they had corrected in this week close to 3.5%. Nifty Bank has also peaked on 15th of January and it had corrected the most by 7.4%. Nifty Mid Cap had peaked on 20th January and it is currently gone down by 1.75%. Nifty Small Cap has also peaked on 15th of January and it has currently changed to by 1.29%. It was down. So let's look at the Indian bond market. The Indian 10-year government bond has is currently trading at 7.171% yield. We had discussed this in the last video also, that the short-term yield curve in the short-term maturity is inverted, which shows there's a sense in the economy in the short term. The medium and the long-term maturities shows are still flat, so there's no harm in the medium and the long term. So I hope you enjoyed this video. Do not forget to like, subscribe and share this video so that you could get weekly updates on the market from us. Thank you.